So if you're listening live and you are looking to invest into basically buying and flipping properties, or if you're an independent mortgage banker and you like to get these loans and learn more about how to offer them to your retail originators, this is actually the show that you'd want to listen to as just a general informational on whether you want to get into it or not. And so with the fix and flip type of loan, it does two things. Number one, it allows with no early payoff penalties and no penalty to the investor borrower and no penalty to the investor lender. And so the benefit to that is that it's a win-win situation. It's profitable for the lender, and it's also profitable, if done right, for the real estate flipper as well. Not every mortgage broker or mortgage lender has this type of product available. They may know about it, but not all of them offer it. Some lenders may offer no down, some may offer 10% down, but the benefit to the fix and flip borrower is that not only do you get to put the 10% down, but potentially you can also get the amount of money to fix up the house. So you'll have a house and you need whatever, $30,000, $40,000, $80,000 to fix it up. And if the house future value, and also they call it after repair value, is greater than your purchase price plus the fix-up cost, then you can get anywhere between 50, 60, 70, 75, in some instances, 80% of the future value, as long as you put 10% down on the purchase price to get a mortgage loan. These are called business purpose mortgage loans. These are not DSCR mortgage loans, so you don't use future income in order to qualify. It is solely based upon the value of the house, as long as the purpose of this mortgage loan is used to buy it, fix it, and then sell it immediately. Fixing and flipping sounds awesome when you're watching HGTV, but doesn't necessarily mean that it always works out. Because again, money is not emotional, people are. You don't want to fix and flip a property that the value looks good, the pro forma looks good, but the property gets landlocked because you didn't study the preliminary title report. Because the person who's actually been through that may have that type of experience, that they don't have to buy a landlocked property, even though all the comps look good, the pro forma looks good, the budget looks good, the contractor looks good, and everybody's been using the same dirt road for the last 20 years. Number two, it's also what I call the anti-fraud 203K. It's bad for you as a reputation, as a borrower, and also there's penalties to the loan officer, and there's penalties to the bank as well. Equity is always more expensive than debt. You know what? There's a lot of people who have actually flipped more than 5 properties in the last 12 months. I think that the general public is uninformed. I won't call them uneducated, just uninformed. And so it's with that purpose is if you're looking to get a fix and flip mortgage loan, you could always reach out to me via LinkedIn, or you can send me an email, or you can send Mike Kelleher an email or direct message on LinkedIn, and we'd be happy to give you a lot of information, as much information as we can on educating you on this product.